Bang! And we are back with another panel. So I was just in the 3D world. I found Nicholas Martin from DataDash, asked him to come into the real world. So the title of this panel discussion is Trading and Investing After the Economic Crisis. Our special guest will discuss the current trends on the crypto trading space and investment markets, considering the state of the economy after the COVID-19 outbreak. First on the panel, we have CEO at TabTrader, Kirill Suslov. Next is the co-founder and chief product officer of 21 Shares, Ophelia Synder. Next, he is the co-founder and CEO of Blockfolio, Edward Moncada. Rounding up the panel is co-founder of Evercoin, Miko Matsumura. And the moderator for this one, the guy I found, Mr. DataDash himself, Nicholas Martin. Nick, the panel is yours. Take it away.
Well, Chris, thank you very much for the warm introduction to everyone. I'm excited to be here today, and I think we've got a really wonderful panel of guests for this virtual conference. So the topic theme here is to really focus on the current environment post-COVID-19. I mean, we're still living in it right now, but I think it's going to be a really interesting change up for the current environment we're in right now, and then also what's to look forward to in the next 6 to 12 months. So as a macro trader, I'm interested to get the perspective of all of you here today. And I want to start off with a very broad question from a lot of you. I bet many of you, whether you're creating your own products or have experience with trading and investing, what's the biggest personal adjustment you've made? Not so much your company, but you yourself as an individual has made to your trading or investment strategy. I'd feel free for anyone to take that away. Maybe Miko, would you like to start on it?
Sure, I'm happy to do so. I think that there's two layers of this. I'm a general partner with a fund. And I think the other piece of it is, of course, my personal investment. I feel like when the storm comes in, we really need to kind of pull the boats closer to the shore, right? So from my perspective, I think obviously one of the things that's really essential in this macro is that, we do have really an interesting Fed balance sheet. So the Fed balance sheet is hovering at about, hovering is the wrong word, but 6.13 trillion at the moment, and it looks like it's going to go north of about 10 trillion, which is quite unprecedented. So, when you look at that macro, you really think about sort of where the killer applications are, and it seems like the coinciding of the Bitcoin half, supply will I think really be beneficial for that asset. So, I think that's really a kind of a core thesis and a core asset for myself.
Yeah, absolutely. To build on that, Miko, I think the general thesis here that we have to understand is not only that this is larger than the 3 previous quantitative easing programs we've seen throughout the 2008 response to the previous recession, but along with that, this is not only much larger, but you have to talk about the mass scale of credit that's going to come out of this baseline money supply that gets created by the Fed. I mean, it's going to be tens of trillions of dollars in stimulus overall. So it's a very interesting thesis for things like Bitcoin. Ophelia, I'm curious as well to get your take on this. Do you feel right now that you're focusing more on the short term or more on the long term in this case with all that's been going on with COVID?
So look, I think personally, I have a tendency to skew towards value investing and long-term strategies as like a personal preference. But I think as a company, we do similarly. We have a tendency to follow the long-term value of various networks, which at the end comes down to things like utilization and fundamentals. I don't think those have changed. I think rightly, you guys are talking about these stimulus packages. I think they make an incredible case for things like Bitcoin, especially as we move into, let's call it a never before seen monetary policy regime globally that's being put in at a speed that's unprecedented. So not only do we have nothing of this magnitude to compare it to, nothing's ever been done this fast. And so I think that adds to the sort of outstanding questions regarding what the stimulus does to monetary policy. I think personally, I agree. I think I'm much more bullish on projects that have real utilization numbers and clear use cases, especially ones that are tied to more currency-like products, given the environment.
Absolutely. Yeah. I think honestly, it's a matter of having something that in this environment can provide some form of hedge for wealth. I think that's going to be the big use case here. And I mean, whether it's Bitcoin, Ethereum, Litecoin, a variety of the other cryptos shooting for that spot. I mean, the monetary policy steps that the Fed, the ECB, all these central banks are taking is going to have a huge impact. Definitely. One thing I wanted to ask you about, Edward, you're running, in this case, as the CEO of Blockfolio, one of the bigger companies in the space that's probably pulling in a lot of data analytics on how the market is performing, how people are interacting with the market, with their positions. So again, just trying to provide a brief overview, what's your take personally, and what kind of things are you picking up from the market at the moment that people are changing in the sense of their positions?
So to many people's surprise, we don't actually look at any of the kind of, aggregate positions or holdings that people have in their portfolios in any way. We respect the privacy of our users. However, that said, we do kind of monitor the general traffic that's coming into Blockfolio, right? And in Q4 of last year, we saw 246 million impressions, page impressions in the Blockfolio app. This quarter, we've seen so far, last quarter, we saw 416 million page impressions. So we saw like a 70% increase in page impressions for Q1 of 2020, which I think is a fairly bullish signal. The first couple months were obviously there was a lot of increase in price in the markets in various altcoins that people are monitoring through the app, and then with the March 12th crash, we did see a lot of activity in the app as well. So,
and speaking, because you're building this cryptocurrency app, in this case, Edward, like that you guys have, it's people, plugging in their portfolios on the kind of analytical side of things. Are you seeing a general user growth as well during this time period? Is it just people just increasing their traffic as already existing users, or is there a good number of new users as well?
We are still seeing a significant number of organic downloads of Blockfolio, but I would say the general MAU and DAU have been I'd say the DAU has been a little bit flat throughout the quarter, throughout Q1 of 2020, slightly increasing, I would say.
Awesome. Kirill, what about you? Do you have anything to take in the sense of kind of like how you've changed your personal outlook on markets?
Yeah. Well, since the...
Oh, sorry. No, you go. Yeah, Kirill, you go. Mm-hmm.
Was it for me or for Edward?
Yeah, for you. I was just going to generally Edward, if you'd like to step in as well and provide a little bit of your personal outtake outside of just Blockfolio as well, then we can get to Kirill.
Okay, let's move it on to Kirill. I'm curious what he has to say.
Okay.
All right, yeah. So my personal observations were that since the beginning of this quarantine and self-isolation, we saw a lot more of social engineering and hacks going on in the crypto space, and not only crypto, but in general financial space. So people have to be more careful now. They sit at home and they're getting socially engineered by Telegram pretenders, email phishing, and stuff like that. So this has been observed in the last month or two. And another personal thing that I've noticed is the uncertainty that surrounded the future of crypto. Because like you say, it's a hedge against wealth preservation, right? But right now, crypto is not a hedge against anything. It's just a very volatile, very leveraged asset that will go down the first when shit hits the fan. So we believe that in the short term, crypto will definitely decrease in value. But later on, when markets get uncorrelated, it might get a higher rise because it's a higher beta asset, and people will probably tend to fly back from quality to more riskier assets like cryptocurrency.
Yeah, I think that's a good perspective. One thing this actually kind of leads into, and Kirill, if you'd like to build on this as well, because you were talking about that short-term perspective. One question that I want to kind of get your opinion on, guys, as we talk about the post-COVID-19 environment that we're in right now. We have a very big event coming up for Bitcoin, and that's actually a big event for the whole crypto space, and that's the Bitcoin halving event. It's going to have a major change in the supply and demand dynamics of Bitcoin on a daily basis. And one thing that I've been talking a lot about on the channel is how to kind of interpret or prepare for that halving event. So with COVID-19 going on right now, I'm curious to get your take, Kirill, and then also we can go around to see what you guys think is going to happen here over the next month up into the halving event, and then afterwards as well. So how do you think that's going to play out?
Well, provided all the financial markets and digitally traded markets are very efficient, and Bitcoin is more efficient than even the traditional markets, we believe everything's been priced in already. So I don't expect a huge change or any structural shift in trading Bitcoin with this respect. However, like generally, aside from having COVID will definitely add a lot of hyperinflationary pressures of currencies that will play out will definitely not buy more crypto with their extra money crypto just because of the uncertainty. That's always been the case. It's just my opinion. Maybe someone disagrees with me. But in the longer term, go on.
Sorry, I think I actually disagree with you. I think that the short term, in a weird way, that the halving is coinciding with a lot of other macro issues. You're going to start to see economies opening up again around the same time in a completely unrelated series of events. And I think it's going to be really hard to parse the signal to noise on that, right? This is going to be when several major European economies are beginning to play with reopening. How the market's going to interpret that, both the crypto market and traditional markets, we won't know until we see what the results of that are. And in a very strange way, these things are lining up in the calendar. So I think I agree with you about efficiency in markets, but efficiency based on what? Because right now, I think while people are very comfortable and understand and know what the halving is going to do in terms of supply, there's so many other unknown variables that are occurring, I don't know, plus minus a week, plus minus 2 weeks, plus minus a month, that what is being, I don't think anybody can price in risk appropriately right now. And I think the proof of that is in everything from gold and stocks appearing more correlated in terms of moving directionally similarly in traditional markets, but also in terms of there being really no way to know where we're going to be in 30 days, either in terms of monetary policy or any other macro trend. So I wonder if in the long term that I wonder if in the short term that pricing efficiency is less complete than it would be under typical circumstances, simply because of the amount of unknown being fed into this from the macro perspective.
You know, I think you both provide a very interesting perspective. And Kirill, if you want to, jump in and stuff and respond, I want to definitely give you the time for it. But I think you both bring up a good point in the sense that there's been a theory for a while that there's been a pricing in of the halving event, and then also as well to your argument in this case, basically about in the sense that something like this can't be priced in. One of the arguments that I've not only heard of, but I've really been promoting on the channel for DataDash is this idea that even though we can have a general prediction of a supply shock coming to Bitcoin, the reason why the last two halving events have been catalysts for these kind of rallies is because it really can't be priced in until it happens. And the point that I always bring up is on a daily basis, there's an amount of buyers and sellers, give or take. If there's a neutral amount of buyers and sellers at around the same price at market value, then prices will stay the same. So on a daily basis, what we've been having to accrue in regards to Bitcoin is we've had buyers in the market having to constantly come in order to compensate miners selling their Bitcoin. There's about a fixed amount of Bitcoin that are going to be sold every day because of these miners. And I think that until we actually get to that point where the supply drops in half and the sell side pressure drops about a third or by half, then in that case, we won't get that shift where there's way too much excess demand from buyers versus the sellers. And that's why it takes a little time afterwards, after the halving event, after we've had a pullback from the kind of hype and anticipation for the event, we don't get the rally until about 2 or 3 months out after the halving event. So if you guys would want to dive into that as well, that's one of the theories that I've heard. But Kirill, if you'd like to speak to the points that Ophelia brought up.
I want both of you guys to be right, because it means very well for us, for me and for Edward and for you guys. But my opinion is still the same. Like the completeness of the market only entails the speed of dissemination of information, and in crypto it's the fastest. If a lot of people already believe there will be limited supply, so it's already been priced into the price of Bitcoin, and when that happens, it will be no difference, because we see historical precedents of the last few halving events, and people will just assume that the same thing will happen this time. But I want you guys to be right. I want me to be wrong.
No, I think honestly, I think both of y'all brought up very good points in this case, because again, we have to have a skeptical view and again, an optimistic view as we step into the macro environment to see if Bitcoin can act as a hedge. I'm curious though to see if Miko, as well as Edward, do you guys have anything you want to dive into? Maybe we'll start with you, Miko.
Yeah, I'd love to kind of like provide a little bit of support for what Ophelia is saying. I think that what's interesting about this current condition is that what we are seeing actually is we're seeing interesting sort of correlation, right, with just very strange things like S&P, so you're seeing very weird correlations, right? So the question becomes, the other things we're seeing in the Bitcoin macro are removal of Bitcoin from exchange providers, which is affecting custody providers like Evercoin. So we are seeing, people bringing from custodial exchanges, there's actually a pretty big move. So the thing that's really interesting becomes, the question is, what's the trading volume queuing off of, right? So if you think about this particular Bitcoin macro, the thing that's kind of interesting to contemplate is that, is this being thinly traded? And if it's being thinly traded, is it being traded by who? And the correlation implies that maybe there's things related to stimulus checks, or so maybe that we'll see a bump of that. But the thing that I think holds the floor is kind of a hodling phenomenon. And as one of the things that we're looking at is we're looking at kind of how much is in self-custody and how many wallets are sort of greater than one BTC, and so we're really looking at kind of like in-money Bitcoin and the behavior of these kind of long-term hodling phenomenons as a floor setting mechanism, right? So the question to me is kind of how thinly is this being traded, and who are the people who are in this? Because I think in the last all-time high, there were a lot of people in it who maybe ought not to have been in it, at that time, obviously. I mean, history, it's pretty easy to say that from a historical perspective. So to me, I think it's important to try to contemplate who's in this and why are they in this, and in order to try to understand what happens next.
I think the biggest problem we're going to have around that thesis is that so much of that dynamic is going to be determined not by anything to do with Bitcoin or what's happening in our market, and so much to do with what these stimulus plans really look like, how they end up impacting the market, and what consumer sort of in the broadest sense of the word sentiment looks like, right? Because in order to, I think unlike previous halvings where the dominant feature was the halving and was the, these sort of intrinsic properties of the Bitcoin market, I think in this case, whether someone's a buyer or a seller is largely not dependent on anything to do with the local market dynamics, and much more to do with this broader sense of, okay, where's the world going? What are we doing? What does monetary policy look like? Am I actually getting a stimulus check? A lot of those questions, I think, are going to end up being deciding factors in terms of fresh capital entering the space, which is what you would need to foster that kind of, let's call it, sustained price increase.
Yeah, but what I guess I just wanted to quickly respond to that, right? Which is, but that's what we're seeing in the broader public equities market as well, which is we're seeing topsy-turvy land, and we're seeing the impact of this kind of massive Fed junk bond buying and kind of M1 stimulus. And so we're seeing a lot of the effects that are topsy-turvy and essentially outside of the fundamentals. So, I think that may be temporary. And if you actually forecast potentially a significant leg down as a function of this sort of artificial inflation in the market, one of the things that's really interesting becomes, if Bitcoin is a gold, then the equivalent of physical gold under your bed is effectively like Bitcoin custody, right? Because that's really kind of, and obviously like it doesn't account for like the ultimate kind of survivalistic scenario where there's no electricity or internet, but which is maybe more of a physical gold scenario. I'm not forecasting that myself, but I'm really interested in kind of the mood of the market and trying to understand what people are thinking.
Yeah, I think to that point, Miko, you brought up, I think it's definitely both assets benefit from different environments. And Ophelia, what you brought up, I think there's two key terms that I like that you brought up. You brought up the term of fresh cash flow, basically, or basically inflows into the market, and also discussing again the importance of the macro environment. I think we sometimes forget how small crypto is. Crypto right now is less than a $200 billion market cap. Right? I think it's sitting around 200 billion at the moment. But as a $200 billion market, the amount of liquidity actually trading here is so small. And if you talk about a portion of equity markets, treasuries, all these different asset markets coming in to cryptocurrencies, I mean, that's really what we have to care about, is how do those inflows come in to the space. All right. So I wanted to get, Edward, do you want to step into this as well? You have a comment to make on it as well?
Yeah, I think it's, in my opinion, things are still very unclear about, how things are going to play out with COVID-19. Primarily, people are going to open up these economies, and is that premature? Still kind of one of the concerns in my mind. If it is, then you're going to see a second wave of, spread of the virus, and then and so you're going to see people going back and forth. It's still unclear to me how people are going to behave, in the next 6 months or next 12 months, right? If we go through these sporadic needs to shelter in place, then it's actually going to be devastating. Go through another devastating time in the economies. It's going to, these kinds of things are going to hammer revenue for all these companies. It's going to crush earnings. And I don't really have any clarity on any conviction just yet on how that's going to be. And I think that's sort of central to, because I do believe there's still a high correlation between, printing money and the equities markets and crypto in general. Given that uncertainty, it's just I'm still yet to have a conviction on it. There's more data I need to get.
Yeah, I think to that point there, Edward, it's no matter what, when central banks print money, basically any asset's going to move up. And I think that's why we've seen what many people would call correlation in regards to, and I think they are kind of directed by the same cause, in this case, Fed monetary policy, the ECB following suit. I mean, it's a race of the central banks at this point to see how far they can push interest rates, how far they can print money through quantitative easing programs and provide cheap capital to the system. So I am interested. I think it's a very humble kind of position to take, to just wait for the next few months and stuff. Have some positioning in crypto, and if you feel it's right for you. The thing I always talk about is basically, for the average Joe, the whole idea is if you really do believe Bitcoin is that hedge and you want to use it to hedge your wealth like gold and silver, all you would need is a fraction of it in your portfolio in order to compensate for hyperinflation, compensate for a mass sell-off in equities. So it's not something you go all into at the end of the day, unless you want to take that excessive risk or you're able to. One thing, Ophelia, you want to go?
A geography component. I think we have a tendency to be centric to whatever our home jurisdiction is. We're talking about this from sitting in the US, I think a good chunk of us, I think there's something to be said for other economies reacting very differently. From both a monetary policy perspective as well as from a recovery perspective, I would anticipate a recovery in Italy is going to look far more difficult. So what does that mean in terms of geographically specific and locally specific environments? And I think unlike in other economic epochs, the one we've entered into now has impacted everybody strongly currently, but we don't know how they're going to recover. So from my personal experience, I live between the US, Switzerland, and Italy. So Italy is nowhere near even beginning to discuss recovery. Switzerland has a timeline for opening up, and New York just extended our lockdown by a month. That's just 3 tiny regions, right? Each one which has a completely different approach. I think as you sort of expand that and you look at how Sweden's reacting, how China's reacting, how consumer spending habits are returning after that, I think this is one of those situations where having a global macro view is incredibly difficult because the levers are far more local and regional than they ever have been. Especially if you think about things like the US, where what's happening in New York compared to what's happening in Texas, compared to what's happening in Wuhan, they're almost impossible to compare or generate a consolidated thesis for.
And just to make sure I get this clear, Phil, you kind of almost brought up 2 points. I mean, I think the first thing to consider is, as you mentioned, different countries in direct correlation with COVID are at different case numbers. They're at different parts of flattening the curve, and they're taking different measures. But along with that as well, what Bitcoin is to someone, it can vary greatly if you're a citizen in the United States, where, for example, the US dollar, your national currency, is the world reserve currency. Even if it gets printed a lot, it can still be quite strong in the sense of its purchasing power. But someone like, and as you mentioned, Italy, for example, which has already been going through an economic downturn beforehand, an economic slowdown, or someone in even worse scenarios like Argentina or Venezuela, where you have a baseline currency that's already been printed into oblivion 3 or 4 years ago, and now you have a global pandemic. So
what do you do? And I would maybe add to that, like more crypto, let's call it crypto relevant countries, things like Turkey, right? We also realize Bitcoin's footprint is not, let's call it equally distributed globally in terms of demand, right? And we're really talking about demand side, because the supply side dynamics, I agree with what everyone's saying. The supply side dynamics are going to be largely, the impacts we're going to see over the next couple of months are going to be significantly coming from the halving in some capacity, right? That the supply side dynamics this is a critical piece of how supply works. The demand side, I think, is where we're going to have more questions. That's not distributed evenly globally. And so how different pockets react will have a disproportionate impact on how Bitcoin performs, because some economies are actually more important to Bitcoin, and the recoveries of those economies and the monetary policy of those currencies is actually going to be more relevant than maybe how the dollar behaves.
Ophelia, I know that Aaron, the conference host and stuff for Istanbul Blockchain Week, could be very happy to hear that you said that. But you're very right. I mean, Turkey is a great example of it. I mean, it's one of a very select few countries that have really started to see a large population, or a percentage of the population, starting to utilize crypto in their actual day-to-day lives, which, I mean, here in the United States, no one's really using crypto. It's mainly a speculative investment. And we're fortunate we get to see it as an investment rather than having to use it as our bare bone form of currency or money. But one thing I wanted to do and close here, guys, before hopefully maybe, I don't know if we'll be able to open it up to questions from the audience that we might have gotten, but I wanted to go ahead and ask you all in maybe 1 or 2 sentences, what's the biggest piece of advice that you could give to traders and investors right now over the next coming months as we're going through this period of time? It can be much more structural kind of advice of saying, like, make sure you get a good cash position, things of that sort. And again, may not be financial advice, but just wanted to see you guys maybe give your opinions. Maybe we could start off with you, Miko.
Sure. With 1 or 2 sentences, really what I'd love to really focus on is defense. So from my perspective, assets like Bitcoin are a defensive position, at some level. Obviously, when you look at that, then it becomes about asset allocation and appropriate diversification. But I do think that, when you think about it, you're really thinking about hedging cash, right? Because, having cash in this kind of macro is potentially beneficial. My feeling is that, I'm becoming a little bit more fearful, because what I'm seeing in the public equities market is greed. I'm seeing more greed than fear at the moment.
Mm-hmm. Edward, how about you? What's your take on it?
Just generally, investments take time. I think it's going to, we have a fantastic environment, I think, for Bitcoin and crypto in general coming up in the next year with the happening, the global economic instability, always my advice is, like, if you're going to make an investment, just give it some time. Don't get too excited. Don't get too bearish.
Absolutely. Usually it turns out with crypto, we're working with 4-year greater cycles. I think what I found so far is that every cycle's been getting about a year longer. So it's important to keep that in mind, to your point there, Edward. And then also, Kirill, what's your point on it? What would be your biggest form of advice right now for the next coming months?
If crypto reaches $2,000 or $3,000, go all in. If it and if it doesn't, then I don't know, just be cautious. It might go to lower levels than it currently is.
Okay. Do we have anything? You have anything, Ophelia, as well? You want to maybe end it off with?
Sure. I think this is a very emotional time for most people, right? This is people's health. It's their families. Try not to have your emotion bleed into your strategies. because I think it is a heightened emotional time for people, especially given you're isolated, you're maybe don't have as much stimulation as you would normally. I think people are having a much harder time psychologically dealing with this than they maybe are comfortable acknowledging or realize. And that is not a good way to enter or exit markets or develop an active strategy of any kind. So
I think that's a great point, Ophelia. The one issue that I've had with a lot of people, I mean, whether it was just normal day-to-day crypto markets, people already struggle to just maintain long-term holdings and keep stuck to their strategy. But in this environment, I mean, I know a lot of people who are hurting during this time. So I think that's a very good point. But anyways, in summary, guys, I mean, this has been a great conversation. I'm going to definitely turn it back over to Chris, and perhaps maybe we've got some questions from the audience. If not, it's been a great conversation so far. It was really awesome to have everyone here for the panel.
Hey guys, listen, Kirill, Ophelia, Edward, Miko, and Nicholas, incredible. That one was one of my favorites of the last 48 hours. I'm supposed to be indifferent, but I'll be straight up. This is my favorite. Talking about this thing in Ophelia, I think you nailed it on the head. This is the craziest time in history. I've been alive myself 40 years. Some people much younger than me, some much older, but I think we all agree that this is an absolutely crazy time. And when it comes to these things, don't do it with emotion, calm down, and yeah, well done to end it off there. We have time for a couple of questions, especially if we pose questions that I can kind of ask you all to just quickly answer. And just to keep it fun and light in this stuff, I'll ask one that's kind of been circulating around, and it's not the price prediction of Bitcoin in 12 months, though please, you can also answer that one as part of this question. But where do you see, like post having 12 months from now, like maybe 12 months from this day, what do you see Bitcoin being and where it's at? It can be price, it can be adoption, it can be whatever. What do you see? Yeah,
I'll start off and just give a very simple answer. I think there's going to be two things. I think price in the next 12 months. So that would place us in April 2021. I think by that time, we're going to be very well near retesting 20,000. And then once we break 20,000, what you're going to have is what happened the last time we broke 1,100, which was the previous high before the rest of the 2017 cycle. And that's institutions finally getting interested in Bitcoin as an emerging store of value, an emerging hedge against global economies. That's kind of the turning point, because I know that was when I first got interested in finally making my first purchase on Bitcoin and getting really interested back in 2017 and 2016. You want to go, Ophelia?
Sure, I can go next. I think you made a lot of excellent points. I actually think you might see more utilization over the next year, like real use cases, people actually using this to transact, especially with some of that geographic uncertainty of recovery and uncertainty of monetary policy, especially in emerging economies, which I think on the net is going to be a very big positive and is one of the proof points when you go back to institutionals. It has a tendency to be a lot about price levels, but also a lot about, okay, how do I actually use this thing? Is it really better than my credit card? Is it really a hedge against anything? Like what is the point of all of this? And I think a year from now, when a lot of this Corona stuff has shaked out in some way, by then it should, I think we'll have a lot better answers as an industry to that, which should contribute to, I think, that positive momentum that you're saying you see in the future as well.
Absolutely. Yeah, I think one of those things on the utility side is going to be decentralized finance. I'm very optimistic about that. So, Miko, do you want to step in there and make any comments?
Yeah, I want to reflect on DeFi a little bit, which is obviously there's a little couple kinks to be worked out there, but the thing that we are seeing is actually that's contributing to a use case that provides volatility, but it also provides basically a bit of a Keynesian accelerator. So it's a real use case. So I think DeFi is a real thing, and obviously it's a killer application for Ethereum blockchain. To me, with respect to Bitcoin and forecasting, I'm definitely with Nick. I think if you zoom back on the chart far enough, what you'll see that, yes, this is an incredibly volatile asset, throws off a lot of beta. But when you actually look at it over time, you may realize that the floor continues to be raised by hodlers. What will happen, I believe, is that people who saw what happened last time won't treat it as frothy, because the floor will keep ratcheting up, right? As people collect more and more and they hold more, right? And that's really kind of why custody becomes important, because people are really not looking at it as a hype asset, but really looking at it as kind of something to hold and hang on to.
Awesome. I think it's a good opinion there, Miko. So Kirill, would you want to step in there and contribute anything?
Yeah, I'd like to add my 5 Satoshis to that. I think in the next 12 months, we'll see growth of a few things. First one is in options trading. So far it's been only futures, and I think options will add a lot to the market completeness. We'll see the decrease in volatility, which will mean that that Bitcoin and crypto in general as an asset class will be admissible to the portfolios of larger endowments and institutions who cannot actually have crypto because it's quite volatile asset. But with increased market completeness, they will. And second thing that might happen in the next 12 months is that more people will actually embrace digital. Sitting at home, you are used to everything digital now, and you don't want to touch cash. So cash is dirty. It has viruses, it has other germs and microbes. So you'll avoid cash in the next 12 months, probably just psychologically. So people will get more used to the digital money, and crypto is a good digital money. It's a small fraction of entire digital money supply, but it is a good fraction, which is enough for more people to use it, and hence the price might appreciate because of that.
I like the psychological ramifications of talking about paper money in that case. I mean, that's a good point, Kirill. So, and the last summary here, I guess, Ed, do you want to add anything there in the sense of any contributions for like what you think about coming in the next 6 to 12 months for Bitcoin?
Yeah, I think people are going to kind of rethink how they approach investments in the post-COVID-19 environment. Going into 2020, I agree with you. Bitcoin is probably going to be nearing its all-time highs. I think in the altcoin market, you're going to see premium altcoins that are going to be nearing all-time highs or breaking them. And what I think is going to be interesting next year is you're going to see like institutional investors kind of rethinking their portfolios, how they structure them. Probably have some more defensive positions in there, because I think the reality is people I think are going to come out of this and realize that these pandemics this is not going to be an isolated incident, right? We've seen multiple of them in Asia already, and then this is the first one that the United States experienced. So I wouldn't be surprised if savvy investors, like some of these professional investors, are going to start looking for these defensive positions, and I think that could potentially be a great environment for Bitcoin.
Yeah, Ed, to talk about that, like you said, you not only mentioned there's multiple phases throughout this current pandemic we're going to go through. We're going to have one probably sometime coming up in the fall and winter, of 2020. So it's not only going to be a prolonged event, but there could be another one of these events or black swan events that could come up and completely reshape the way, markets interact over long-term cycles. So something like Bitcoin that's kind of non-correlated, similar to gold and silver, I think it would be a very interesting proposition. So good on you. I think that's a good view. But Chris, I'll let you take it back and stuff. I appreciate you letting us answer some cool questions.
Yeah, that's all fantastic answers. Now our team just told me to cut off, but I'm not going to, because I'm going to ask a really quick one. So nothing more than one quick word from each of you guys. Favorite cryptocurrency in the space other than Bitcoin and Ethereum. One answer each, quick, and then we're out.
Okay. You want to start off, Ophelia?
Sure. It's probably a tie, which is, I know, an annoying way to start this, but BNB and Link.
Yeah, I would say either Link, Kyber Network, or Basic Attention Token. You want to go, Miko?
Yeah, I'm with Basic Attention Token. Big fan of the browser. It has a use case beyond crypto, and people are picking it up.
Awesome. How about you, Ed?
Probably Link, Tezos, maybe Cosmos.
And for you, Kirill?
I think anonymous coins like Monero, because people are sick of governments prohibiting everything and just messing with our lives. So I just, at least in the financial space, I want some privacy and something to myself.
Awesome.
Well,
Chris,
guys.
thank you.
Listen, thank you very much for joining us. We're going to be moving on. Thank you so much. Stay safe, and we'll see you in the next one. Take care, guys. All right, moving on. We're coming close to the end. We can see that this is coming to an end. There is a massive after party virtually. I will be drinking some beers non-virtually, but I will be in the virtual world as well. We're going to have a short break, and when we come back, we have a very, very exciting guest.